Welcome to the Daily Update Podcast, where I'll go over the action in the market for Friday, August 1st, and we'll see how things look for Monday, August 4th. Going over what happened on Friday, the S&P 500 experienced a significant decline, especially compared to the moves we've seen lately. It dropped below its 20-period moving average, signaling a short-term bearish trend. The index gapped lower at the open, hitting below the S2 pivot point at 62.65, found support at around 62.15, but faced resistance as it tried to bounce at the R2 level, ultimately closing down 1.6% with above average volume. The Dow also fell below 44,000, and the Nasdaq saw a sharp decline as well, with the S&P dropping below 6,300 from its prior level of about 6,400. The futures were already negative before the market opened, but a key driver was a weaker than expected employment report. The data showed disappointing job growth with downward revisions to prior month's figures, pushing the unemployment rate to 4.2%. This sparked concerns about an economic slowdown. Additionally, new tariffs took effect, including a 50% tariff on Brazil, 35% on Canada, 25% on India, 20% on Taiwan, and 40% on trans-shipped goods. While anticipated, these tariffs aligned with a seasonally weak period, adding further pressure to the markets. Looking at sector and asset performance, amid the sell-off, there was a clear shift toward defensive positioning. Value stocks outperformed growth, although value did decline, and sectors such as healthcare, staples, and utilities showed relative strength. In contrast, growth-heavy sectors, including discretionary, tech, and communication, were hit hard. The financials are also continuing to underperform the broader S&P 500, with their ratio nearing a bearish death cross signal. Looking beyond stocks, other asset classes reflected a cautious mood. The U.S. dollar fell below 100, oil prices dropped over 3%, and bonds saw gains in the short and intermediate term, indicating a flight to safety. Commodities, meanwhile, turned negative in the short term. These movements underscore a broader defensive posture among investors. Looking at economic and policy factors, beyond the employment report and tariffs, other economic indicators added to the market's concerns. The ISM Manufacturing Index came in at 48, below the 50 threshold that signals contraction. Construction spending also disappointed, declining by 0.4%. Meanwhile, interest rates did drop down to 4.22%, with the 10-year yield from 4.36%. On the policy front, there were notable developments. Federal Reserve Governor Adriana Kugler resigned from the FOMC, with President Trump set to nominate a successor. Additionally, President Trump dismissed the Commissioner of Labor Statistics over data revisions, sparking some typical controversy. These changes added an element of uncertainty to the policy landscape as the markets looked for clarity on future Fed actions. Going over the technicals and sentiment indicators, from a technical perspective, the S&P 500's position below the 20-period moving average is a key signal of short-term weakness. Indicators including the parabolic SAR, Stochh RSI, and Williams percent R have all turned negative, reinforcing this bearish outlook. The VIX sparked back above 20 to 20.38, indicating heightened investor nervousness. The VIX's 9-period RSI reached extreme levels, and while the volatility risk premium was high after Thursday, it did ease after the decline on Friday. Sentiment also took a hit, dropping to a neutral reading of 50 from 63, reflecting growing caution among investors. Intermediate-term indicators, including the McClellan Oscillator and Connors RSI, which were showing a negative divergence, have turned negative, while the long-term trend remains positive but is showing early signs of weakness. These technical signals suggest the markets are at a critical juncture. Looking ahead to Monday, August 4th, the economic calendar is relatively light, with factory orders being the primary report due. However, the week will bring more data, including the ISM Services, the Weekly Mortgage Applications Index, productivity, and jobless claims, which could provide further direction. Seasonally, August has historically been weak in post-election years, with an average return of a negative 1.2% going back to 1950. While a potential bounce may occur earlier in the month, further declines remain at risk. The short-term trend is now negative, with developing weakness in the intermediate term. The long-term trend, while still positive, is also slightly under pressure. Investors should watch key levels, particularly the S&P 500's 50-day moving average, as potential support if there are more declines, and any new developments regarding tariffs or trade deals. In conclusion, Friday marked a challenging day for the markets, driven by a weak employment report, new tariffs, and broader economic concerns. The S&P 500's decline below key technical levels, coupled with a shift to defensive sectors and heightened volatility, points to a cautious outlook in the near term. While the intermediate and long-term trends remain positive, developing weakness suggests investors should stay vigilant. I hope you found this podcast helpful. For more in-depth analysis and commentary, the full-length daily video update is available on YouTube and Rumble right when the market closes each day. To access the videos immediately after they are available, or to access the daily newsletter, please click on the links below.